Hello Dairy Today viewers. On behalf of your Market 360 advisory team here at Stewart Peterson, I'm Tom Mongovin, and this is your weekend review for the week of August 3rd, 2012. Taking a look at our CME dairy components this week, we take a start out with the block barrel average. Blocks settling unchanged at 170.5, so no changes there this week. Barrels down just half a penny to 168. Butter was up slightly to 169 this week, and whey and non-fat dry milk were also up slightly to close out the week. Here are the milk settles from Friday afternoon's close. Milk finished the week sharply higher on Friday after an active cash cheese trade this morning. More on that in just a minute. First, let's take a look at the weekly closes for the Class 3 prices. August is now front month, up 19 cents to 17.49. September rolls to the second month contract now, settling at 18.77, up 42 cents. And the fourth quarter months, October through December, up anywhere between 45 and 54 cents this week. Here is the block barrel average on a weekly chart, and while the market was fairly quiet Monday through Thursday, it really picked up in activity this morning on Friday. A total of 2 blocks and 15 barrels traded today. Surprisingly, the block barrel market, with all that buying, was up only a penny today, and as we mentioned, was down a quarter penny on the week. Taking a look, you can see the trend that has been developing over the past few months is still in play. However, the last 3 weeks, it looks like a top might be in place and that trend could be heading lower. It is too early to tell if this is true yet, but definitely something to keep our eye on. As we can see, that trend was heading higher, and we're still in that channel, but it certainly looks like starting 3 weeks ago that the trend could be heading lower. More on that when we look at the CME Oceania spread in a couple slides. Taking a look at September milk chart, taking a look at our technical support and resistance areas. First off, support. We have support coming in at 1807, which is the double bottom that we've seen in the chart, with the bottom happening here and a bottom happening there. Pretty reliable technical support area. If we were to break through there, we would expect to see the market flush lower. On the upside, we have a pretty reliable downward trend that we've drawn in right here. We came very close to it today. It comes in right about 1888, and if we were to see prices eclipse that resistance point, we would expect the market to head higher. Again, market settling at 1879 today on September. Here we have a chart of the weekly select cheese and cold storage. We mentioned last week that this year's levels were trending in the wrong direction, and that trend did continue with the most recent data. The level from this week is now 4.8% lower than this week of last year. This is certainly bullish for prices, as it indicates there is less supply available. There's also probably some foreshadowing here of a decrease in the year-over-year production on the monthly milk production report that will come out on August 17th. So here you can see from the purple line, these are our numbers so far for 2012. These last 3 weeks we have been declining, and then that green line is our area from 2011. So you can see the space in between there represents the 5% that we have lower in storage this year. Another bullish theme going on right now has to do with dairy cow slaughter. The latest weekly slaughter report shows that over 60,000 head were sent to slaughter over the latest week ended July 21st. It has been 15 weeks since the last time slaughter was above the 60,000 head level. Taking a look at the chart, it is not unusual to see an increase in slaughter these last couple of weeks, as it is seasonally expected, but the magnitude of this increase is impressive. You can see right down here we would expect jumps as we saw in 2010 and 2011, but 2012 is really jumping, and it looks like it's going to keep climbing. Year to date, just under 1.7 million head have been slaughtered, and that is up about 4.5% from this time last year. As we just saw on the supply side, there are some bullish themes going on with lower supply and storage and higher cows being slaughtered. One of the bearish items we are watching is the widening spread between Oceania and CME cheese prices. In the most recent data, Oceania dropped another 2 cents down to 161, and CME is still trading around that 170 range. As we have mentioned before, with this spread, we do run the risk of pricing ourselves out of the export market. Taking a look back at the chart, this scenario has played out a couple times before, but it never lasts long. It did happen here, as the blue line is CME. We went above Oceania here, it lasted about a month, and then we crashed back down. And previously, it lasted about a month and a half, 2 months here, and then we crashed back down. So here we are now. We're at about a month and a half here where we're above. So this is another reason why the cheese market may be topping out at this time, because we need to get ourselves more in line with those prices in Oceania. Taking a look at the week ahead, first off, we have a USDA supply and demand report coming out Friday morning at 7:30 Central Time. As has been the case since the market's hours have been elongated, this will be open while the market is trading, and everyone will have their eyes on the USDA estimates for the soybean and corn yield. It certainly could move the grain markets. Also, we'll get to see if we see some follow-through buying on the milk side, as prices were up 30 to 40 cents today. We'll have to see if that carries over into Monday. That will do it for us here. On behalf of your Market 360 advisory team here at Stewart Peterson, thank you for watching and have a great weekend.